All right, so reviewing the Bitcoin chart. I'm thinking that we have one more drop potentially, and I would say the next level it could drop to is this level right here. So and let me see, which would be between 86 and 84. I probably would look, me personally, we all know this is not financial advice. This is just what I'm sharing. I always like to do orders just a slightly above the order block or the support, and seems like that usually works better for me as far as getting the transaction to go through and to immediately put in a stop loss just in case if it were to go against me in a different direction than I think it's gonna go. So this is the 4-hour chart, and what's making me think this is this can be tricky for a lot of people, even well, I'll even say for me too. But when I see, it looks like you have. So some people could see that as a inverse, and then some people could see this as a head and shoulders. So it's like it's both. It can like go both ways. And when something looks like it can go both ways, I stay out of it because that is confusion. I wait for it to decide. But I was in it. Once I saw it could not reach a certain point, I got out. I was keeping track of my kept moving my stop loss up. And I can kind of show you. Let me get rid of this. So if I go down to the 5 minute. So the way I remember, I came in, I said that I wanted to do, in the earlier video, at 9, I think I did 926 or 925. So it was either 926 or 925. So somewhere around here, right? I got in. And so once it, like, say for instance, once I got in, I did a fib. Let me take this one away. This is a newer fib. I did a minor fib from the latest high after it made its way all the way down to a complete bottom for that dip. And so I would kind of let this guide me along with making little minor supports. And just to kind of go give you a little bit of details, and this is not what everyone, I'm not saying this is for everyone, this is just the way I handle it. I go to the smallest, like between 1 and 5 minute chart. And so once it made it here, once it made it about right here, I still had my stop loss up under here. And until and what I would do is draw like a trend line or parallel trend while it was happening. And then what I do after there is once it falls out, I wait for a bounce and then I come out. So once it comes out of that trend, you can do it either two ways. You can, but I'm gonna just show you what I did. I'm not gonna make this overcomplicated. Once it came out of this trend, I didn't just come out immediately. I wait for it to bounce. If it didn't make a higher high, then that's when I get out. And then I let it kind of do its thing, bounce back. I got back in again, round about here. And then I moved my stop loss up to, because remember it was down below here. I came out, came back in, put my stop loss below this. Support right here. And then I would do a little minor fib. Right? And I saw it hit the 161. And I kind of just do this as it's happening. Like I'm constantly drawing fibs. I'm constantly drawing little minor supports or minor order blocks. I'm doing minor trend lines because I am catching the minor profits, I guess you want to say. And I just keep it simple with that, right? And just keep those constant rules. That makes it not so complicated. I try my best not to overcomplicate it. I just stick with my fib, trend lines, and support and resistance. I don't use any other indicators. I used to, but now I don't. Only other thing is just compare it to my higher timelines. Period. And I try to stick with day trading the same type of coins over and over because I start to learn their patterns. By doing it, I have a greater level of confidence as to what's probably going to happen next because of the pattern of that chart. Now, I might use those gains to buy another coin that is at a cheap price, but I'm not going to day trade it. I'm just going to do more of a longer swing trade on those type of coins. But I do love day trading Bitcoin because the benefits of day trading something like Bitcoin is that you can do longs and shorts and you can do leverage and you can learn its patterns. And that can be a powerful strategy. Whereas someone who's trying to hop around and find different things to trade on a daily basis takes way too much more effort. I've tried that. It just did not work for me. I like sticking to things being simple, basic, and repeatable. And that makes less effort, less work, less trying to figure out. And you can build upon that. And you can leverage that. You can get to a point where you can leverage it. And now that trade that with leverage can be like an enormous amount of money because you just stuck with one thing, if that makes sense. But so going back, sorry, I went on a little tangent, but going back, basically came out around here. I would erase my fib, that little minor fib that I just created. Look, then I kind of zoom out to see what am I looking like on a higher time. So when I zoom out, I'm like, well, this look like this is about to fall again. So now when I zoom back in, I have a different perspective. So we just made, right, like I was saying, like just made that run, got out, got back in, made this run. And now the next step I'm going to do is I'm going to let it keep falling and see if it's going to go below this last support that I drew. I'm not getting back in until I can see which way it's going to go, because like I said at the beginning, it's kind of giving a confusing pattern. It's giving a little bit of inverse head and shoulders and a little bit of head and shoulders. So, and then the next thing I usually do is go ahead and draw my last resistance. And it's probably better to draw it from maybe like the hourly chart. And I'm going by that last green candle at the top. So now I don't see it working its way back up here. I'm going to see how it reacts to this last little off of the 5 minute. How it reacts to this support. Is it going to be able to hold it, or is it going to go through? Or is it going to just like steal any what another thing it can do, it can get here and take any buy stops and then go back up. But if it does do that, what I'm going to be paying attention to, I would have an alert, which I already do. Let me change it to right above that support. So when it gets kind of close to it, and then I would put a move this alert down to above where it last went higher, just to make sure it doesn't go in the opposite direction, but it looks like it's making a downward movement. And wait for that alert to go off, and then wait to see if it's going to continue further past that, or is it going to make a bounce. But I really believe it might make a little bounce, but I think the overall is for it to come back down to here, to this next level, which is what we were talking about earlier. And that's pretty much it, right? So it doesn't take a whole lot. It just takes learning the fundamentals. Well, you can learn fundamentals, but as far as I like just trading from the chart. That's just my preference. There's many ways to trade. You can trade from fundamentals. You can trade from news. You can trade from indicators. You can trade from on the chart or whatever. Whatever it is, I just learned to just find something that works for you and stick with it. And then leverage it. Once you get really good at what you figure out works for you, then take it to the next level and bank leverage on it. So I hope this helps. Let me know, and please like and share and subscribe if you're not a part of our little small mighty family. So but all right, thanks. See you probably Monday.